So there is a DeFi-related token that you probably haven't heard of unless you read the news headlines this morning. And that is a little token known as Ampleforth. And it has generated quite a bit of buzz over the last few weeks, but what DeFi project hasn't? Because it offers annual staking rewards. And it's a stablecoin. So it's managed to capture the attention of new investors that are looking for the next big DeFi project, the next addition to their yield harvesting strategy. So their native token is known as AMPL or AMPL. It's designed to be pegged at roughly $1 per token, but massive inflows of capital have recently caused its price to rocket well past their stablecoin peg. Earlier this month, AMPL climbed as far as $4 in trading on certain markets. Now, one reason for this is it has an internal mechanism to keep the price stable around that $1 mark. So the token automatically rebalances itself daily by adjusting its circulating supply by a large amount if necessary. So since it had this unnatural move to $4, its price has been finding equilibrium. And price began cooling off back towards its natural level of $1, its intended target. And that was until yesterday, when an Ampleforth futures market was opened on the growingly popular crypto trading platform FTX. And this caused the wildest price swing to date for Ampleforth. So let's look at the actual contract details here for the Ampl futures contract. This is the official listing announcement from FTX, which notified users on the platform how the Ampl token was going to be, how the Ampl listing would be conducted on July 23rd. And how they're going to go about pausing. So they introduced this concept of pausing the market in order for the Ampl token to rebalance itself, right? To rebalance its portfolio on a daily basis. Because again, this is intended to be a stable coin pegged to $1. And the coin's internal mechanism rebalances the existing supply on a regular interval. And that allows them to have this kind of novel mechanism to offer price stability. Now, so in this regard, FTX listed Ampl on a spot market. This wasn't something that anyone questioned. You know, users could have just been excited that this was coming to another high profile and high volume exchange. But FTX also listed Ampl for futures trading under their perpetual contract. And this was really confusing. Why would they do this? This led some to wonder how this would be possible considering the coin's elaborate underlying mechanics and its impact on spot prices. So indeed, in less than 1 day after the listing, users of FTX reported the price for Ampl on the FTX platform shot up to $13,000 per token for one instance. Okay. So here is a kind of nice funny tweet from little Aurat. It says, feeling broke when Bitcoin's 13,000, woke when Ampleforth 13,000. So here, before we get into the investigation as to why, let's look real quickly at the chart. All right, so here's the FTX marketplace right here for Ampl perpetual futures. As we can see, it is currently trading at $2.05 roughly. So been relatively stable in this area. Now let's go to, so a good example here is at about 2 UTC. So you can kind of see here where price was froze, right? Before this rally up to $2, and this is the perp future. Or excuse me, this is the perp futures. Now let's look at. I don't know if here's the thing. I don't know if FTX has reset this chart or what's going on, but we can go to TradingView and let's look at FTX up until this is about 7:10 a.m. UTC. So that's going to be at 2 o'clock in the morning for me. So 2 o'clock Central Standard Time in America. All right, so this is a pretty volatile market, right? We got this initial drop to $1 from $2.50, so that's a big move, and then some pretty volatile consolidation for what should be a stable coin. Go look at USD to USDT. Now, that is until, of course, this happened. So as you guys may be able to tell, I have replay mode on, and I'm going to hit the very next bar. All right, this is a 1 minute bar. This isn't done yet. There's that 1 minute bar. This has flattened price, because that price right there of that 1 minute candle is 13,127. This is the price of Ampleforth in USD, the value of Ampleforth in USD on FTX. In 1 minute, it went from, oh, hold on, let's go back 1 minute. Okay. So price went from $1.789 and closed. Yeah, this is 687,187%. Congratulations, cryptocurrency. You've done it again. Soon after this, FTX CEO responded about the situation, or commented on the situation on Twitter here, explaining that, quote, it was an error in the spot ample books for a few users. That's all that was behind the wild price spike. But come on, man. What really happened with the ample price on FTX that day? As we looked into this, I want to point out that I mentioned this earlier, that FTX listed ample tokens for their trading through a perpetual futures contract, which tracks the spot price of the asset. This allows users to have both long and short exposure to Ample's price simultaneously, a process known as hedging. And while this is perfectly reasonable for most cryptocurrencies, however, Ample is different because it has an underlying mechanism that has an embedded feature that causes supply to vary. And that makes its price somewhat predictable. Now, because the protocol is designed to keep the price relatively stable at around $1, when the current market rate is lower or higher than this target, the protocol inflates or deflates the supply of tokens on the market as an automatic rebalancing function. Right? The other important thing to consider here is that thanks to the magic of smart contracts, this happens automatically on the blockchains every day at a specific time to UTC. So in other words, traders can easily predict whether or not the price for Ample will increase or decrease statistically based on its current market price at that time. And not only that, but because the formula is easily calculated, it can even approximate how broad of a movement price is likely to make come rebalancing time. And this is where it all gets dicey, because unlike FTX's spot exchange, which pauses trading during this 2 o'clock rebalancing period, the perpetual futures market on FTX was not being paused. It was wide open. And what this did was create a situation where when the price of Ample is higher than its target price, someone could easily go short on FTX's perpetual contract while also holding a spot position to receive the new tokens entering the supply due to this rebalancing. This way, traders on FTX could make money on the futures markets while expecting the predictable price correction, and also still have their spot positions reap the rebalancing reward. So if we were to take a look at the first rebalancing of the Ample supply following its listing on FTX, we can see how price dipped on spot around 2 UTC as a result of the supply rebalancing once the exchange resumed trading, and futures markets followed suit, meaning anyone shorting Ample on the FTX futures markets around that moment in time would have profited on what was an easily predictable move. Now, as for that order book glitch that sent price to 13,000, it is unclear how that may or may not relate to this daily balancing mechanism. This price hiccup occurred about 5 hours later from the rebalancing. But in any case, it remains interesting to see how these kind of novel perpetual contracts are going to pan out moving forward, and whether FTX is going to encounter other issues with this Ample token being listed on its platform and being available on both markets, and having to contend with its underlying mechanism of daily rebasement. Now, I want to end this with just a slight piece of advice for those who might be foaming at the mouth on the idea of a brand new, guaranteed trading. This information's already out there. It took our team just a few minutes to realize the kind of the mathematical opportunity here, which means, by the way, that the rest of the market's figured it out as well. And so there is going to be a lot of competition over the trade. And unless you think you might have an edge in speed, I would not recommend you take this trade. Or let me say this: go forth, but with caution, guys. Go forth, but with caution. Hey, I'm rooting for you. With that being said, let me know if you guys have comments on this. Question about this is, first off, do you agree with our mathematical conclusion that this is a predictable price movement? And B, what do you guys think caused that order book glitch? And how many attendees did they get on that trade? That's the real question. Right? Somebody retired to Panama Beach today. All right. Thank you guys so much for the comments. We do randomly pick one comment winner per month to receive a free month of access to the premium trading group basic subscription. So make sure to leave those comments down below, guys.